Today, we will talk about how to make 50% return per year. For almost all types of investments, the longer you can hold the investment, the more valuable it becomes. Long-term investments tend to perform better because they account for short-term fluctuations. You never want to sell an investment when the value is down. But for many investments that have dips, they recover and then become worth more than before the dip. In my view, you always want to buy low, sell high. 1. Invest in stocks for the long term. Long-term investments tend to carry less volatility than short-term ones. Even stocks that may have volatile movements on a daily basis can produce stable returns in the long run. Additionally, you earn a tax advantage for holding stocks for at least one full year. Currently, you pay no taxes on long-term capital gains if your income falls below $41,675 as a single taxpayer. If you earn more than that, but less than $459,750, you pay 15% of your gains. If you earn a higher income, those gains get taxed at 20%. Meanwhile, short-term capital gains count as ordinary income, which takes a much larger cut of your profits. Long-term investing can sometimes also save people money from transaction costs. 2. Invest in stocks for the short term. While long-term stock investments give you a better chance at making a profit, some people can make significant gains through short-term stock trading. Day trading, when people buy and sell stocks within a day's volatility or short period of time, can be extremely lucrative. When a stock rapidly gains momentum, the price can rise in a short amount of time. For example, GameStop stock has a 52-week low of $2.57 and a 52-week high of $483 as of publication. Even within single days, the price soared. For expert day traders and more beginner traders who got lucky, the profits were substantial. However, while a lot of the people who made money by buying and selling GameStop for short-term gains did so by paying attention to the financial news, this isn't always a sound strategy. For every person who made major gains with the stock, others came out at a deficit. 3. Real estate. Real estate is one of the most popular investment options, and there are many ways to get involved in it. Real estate acts as an inflation hedge and can create multiple sources of income. For those who can afford it, buying and running a rental property can provide you with a great return. If you're looking to invest in apartment buildings, you may want to team up with a partner or invest through a real estate syndication arrangement. Alternatively, you could purchase a second home to rent out. Renting to a reliable tenant means you get a return on your investment every month, and you can often still sell the property for an additional profit later. 4. Investing in fine art. Between the years 2000 and 2018, blue chip art outperformed the S&P 500. Blue chip art by artists such as Picasso or Claude Monet carries exceptionally high price tags, and the vast majority of people can't afford these pieces. Even if the average person found the money to buy fine art, they would still need the proper connections to sell it for a profit. However, investing in fine art has now become achievable with less money and connections. The art investment company Masterworks allows you to purchase a fractional share of fine art for a minimum of $1,000. The art experts at Masterworks choose strategic artwork to purchase for reselling later. 5. Starting your own business or investing in small ones. They say one of the best investments you can make is in yourself. If you have a knack for business and some money to get started, creating your own business has endless potential for high returns. It doesn't have to be a huge business. For example, if you're currently a graphic designer, you can start a graphic design company where you do some work and outsource some to other designers. You would receive a cut of the profits for connecting the client and designer. 6. Investing in wine. Fine wine has less long-term market volatility compared to most other investments, including real estate and gold. There is a finite supply of wine from different regions and years, so the supply can only go down, and you're almost guaranteed demand will go up. Between 2005 and 2015, fine wine delivered 13.6% annualized returns. However, you need to store wine in ideal conditions that prove challenging to replicate in your own home. Therefore, it's useful to use a wine investment company, such as Benovest. 7. Peer-to-peer lending. Peer-to-peer lending is when an investor gives an individual a loan, much like a bank would. Sometimes people are unable to secure loans from banks or would prefer to borrow from another person. The investor receives interest on the loan as well as repayment. However, this system does carry the risk of default. To reduce this risk, you can consider something like a secured peer-to-peer lending investment platform. These investments aren't FDIC insured like a high-yield savings account or checking account, nor do they come with an attached debit card, so the higher rates of return comes with risk. 8. Invest in REITs. A real estate investment trust, REIT, is a business that owns cash flow producing real estate and pools investors' money to obtain and manage real estate properties. Usually, these are high-end or commercial properties. Unlike most other types of real estate investments, REITs are a liquid investment you can sell at any time. They pay out dividends to investors. You can purchase REITs through major brokerage firms such as M1 Finance. M1 Finance is a great option for buying publicly traded REITs because they charge no commissions or management fees. Another option, Straightwise, gives both accredited and non-accredited investors the opportunity to invest in private REITs. The current minimum investment for non-accredited investors is around $5,000, and all investors receive dividend payments. Millionaires by the Motley Fool puts Straightwise as the highest-rated real estate investment platform, and it acts as one of the best passive income investments. 9. Investing in silver, gold, and other precious metals. While mining gold may seem to be a thing of the past, people still actively mine it today. There is even a show called Gold Rush, following several mining companies' journeys. While gold prices fluctuate, long-term, it's a solid investment. Although gold gets more attention, silver is a favorite of many investors. It's more volatile than gold, but that means with the proper timing you can end up with substantial gains. Plus, it's more affordable than gold if you're starting out. 10. Junk bonds. Bonds are categorized as either investment grade or junk bonds. Junk bonds are high-yield, higher-risk bonds. They come from companies with lower credit ratings than those of investment-grade bonds. The higher the risk profile of the bond you choose, the greater the return to justify your investment. If you're nervous about individually picking a junk bond, consider a high-yield bond fund. These bond funds decrease your risk by diversifying portfolios across multiple bonds. What do you think of our video? Let me know in the comment section below. Before you go, please hit the like button and subscribe to my channel. Thanks for watching.